Hello everyone, good morning, good afternoon, and good evening. So today's video is about Infosys and uh, the impact of Anthropic on um, Infosys present valuation and stock price. So Infosys had recently announced after the massive sell-off that happened last week. Infosys announced that it is going to join hands with Anthropic, and they're going to it is going to deploy AI agents to its customer. So with the help of Anthropic, anyway. So the point here is. You are not developing something on your own, you are just taking something which has already been built by someone else and just deploying the agents. So it is kind of, so I'm not sure like what revenue can a company like Infosys can generate by getting into such a business where they're acting as a kind of broker in between Anthropic, and Anthropic will be the anyways a service provider and the customer. So it is kind of a broker, so who gets into the business and tries to deploy AI agents. AI agents are already there, so it is deploying. So the agents, it is not building the agents on its own, so it is just deploying the AI agents on the customer's infrastructure. So I'm not sure like how much revenue can a company generate, because Infosys, what was expected from Infosys, like it will develop something of its own and then it will deploy. So right now they are not into that business model anymore. It looks like, based on a present situation, this looks like they're kind of getting into a support, like a customer service kind of role, where they're assisting the customers deploy the AI agent. So what kind of thing is that? So I'm not sure, because every IT company or every big company, every MNC has its one set of engineers who deploy the agents. So where exactly Infosys, a company like Infosys, will gather customers from, if the clients already have resources at their end who are going to deploy the AI agents for themselves? They're not going to rely on any third party, any broker, to help them with their deployment. So considering that, as because the approach of Infosys here has been extremely kind of they are kind of trying to stay behind someone and just act like okay, they will be still in the business because of someone else. They are not doing something directly by themselves. So I expect Infosys will continue to decline. Right now, it has gained a bit today in the ADR. So I don't think Infosys will be able to sustain these levels. The market cap of Infosys is extremely high. It is around $62.2 billion. So why would a broker, why would a company like Infosys, who is acting as a broker for the time being, will be valued at this market cap? So this is something which is, yeah. The EPS is also like it is good. The EPS is, I won't say the EPS is bad. 0.77, yeah, 77 cents is not a bad EPS. I won't say it's a bad EPS. But the future prospect of business is declining for Infosys right now for all the Indian IT services. So that is something really concerning, because they are not building something indigenous and sharing it with the global market. They're not sharing anything with the world, something new that they have built. They're just acting as a shadow, okay, shadow of Anthropic over here. Okay, so I don't think Infosys will sustain. Coming to other few shares, today ICC Bank has gained a bit of momentum. The FOMC meeting is likely to be there by around, I think, Indian time 9 or 9:30 maybe. I'm not sure like what time that is. But all the banks, majority of the banks listed in the New York Stock Exchange have gained today. Even the Sensex performed really well today. By the later half of the day, the Sensex performed really well. So all because of the likelihood that there is going to be a rate cut again, announced by the federal. So that was the only reason like we saw a uptrend in the market today. But whether the rate cut is really coming, the inflation data states like the inflation in India has been at its worst right now. At the same time, I'm not sure about the US inflation right now, but let's see that. uh, US inflation, UK inflation cools. Focus US data. So US, okay, that data is yet to come, I think. Yeah, okay. So the data is yet to come, the US inflation data, but I don't think the US inflation data is going to be any good because of the tariff. So tariff has caused the inflation, so that is not a good sign. So I am not expecting any of the banks in one of my previous videos. I have explained like I'm not expecting any of the banks to perform for the next 3 to 6 months. I don't think the banking shares will perform really good. Even the IT, I don't expect even the eternal Swiggy shares to perform well. Honestly, I don't think they'll perform well. But we see like today there has been a SDFC and ICICI has showed a bit of positive BT on the ADR, but even Infosys also, and Reliance as well. Yeah. So should we expect for a gap up on 19th of February? Should we expect that? Not sure, but what I believe, this is all because of the likelihood of a rate cut. So things are looking very positive. But if you're considering the inflation has been should come high. It has come high in India. Also, I am expecting the inflation report for United States is also going to come high. So I don't expect at high inflation they are going to come up with a rate cut right now. At this, because there has been multiple red cards, by the way, so that's the reason. Otherwise there would have been another red card, that wouldn't have been a problem. Even the US president, although they are continuing to pursue it for a red card, I don't think the red card is coming anytime soon. I don't think so. Maybe after the Jerome Powell's tenure is complete, after the new federal chief takes over, we can expect a red card. So that is probably happening by the month of May, I think. So by May we can expect red cut, but I don't think Powell is going to encourage another red cut. Yeah, for the timing. So the market is looking positive right now. The area market is looking positive only because of the FOMC meeting, which is going to happen, and they are expecting red cut. So things are looking good for most of the stocks. Yeah. But again, for Infosys, I don't think Infosys will be able to sustain with this present business model that they are sticking to, or they are likely to go ahead with. So that business model is of a broker. It's a broker. Infosys it was into IT service and consulting, so it is getting into a broker services. Like you send people from your company to deploy AI agents. So what kind of thing is that? I think most of the companies have their own people. So this business model, I don't think this is going to work. So things are looking very positive because of the FOMC meeting that's going to happen today, and I'm expecting there won't be a rate cut. So whatever the gains that have happened right now, so the gains will erode in maybe next few hours from now. Yeah. So that's all for the video, and I'm expecting banking stocks and IT stocks not to perform well for the next few months. Yeah, maybe I'm not sure about the timeline over here, like till what time they won't be performing well, but I'm expecting banking stocks and even FMCG stocks also. I'm not expecting any growth for the time being because of multiple factors, inflation being one of them. So yeah, so I'm expecting decline in ICICI. Like I'm expecting from what I could say, the ICICI was shares were trading at around 1408 rupees, on NSE. So I'm expecting that to plunge around close to 1360, maybe 1360. So this one should trade around how much? It should be around maybe $30. Yeah. Similarly with SDFC, it has gained a lot today, 33.08. I don't think it can sustain if there is no rate cut. That has been the only positive thing. The market is believing that rate cut is coming, but I don't think it is going to come. And 33.0 is too much. I expect SDFC is really performing well in terms of the profitability, but I still don't think it can. The EPS for SDFC is not that great compared to the other banks. Other US banks, it's not that great. It is comparatively less. So I expect SDFC also to drop and come around 32.5 US dollars. Similarly, Infosys is again very hyped right now, only because of the drop in the share price. So people are thinking is buy the dip, buy the dip. Because that's the kind of message people have been spreading across the market. So I don't think Infosys is a good buy at this moment. It's very unreliable, inconsistent, and people should get their hands off Infosys. Like Infosys, Wipro, TCS, all the Indian IT stocks. So they should get their hands off these stocks. Coming to Reliance. Reliance has been performing really well. This is one of those shares which has been performing absolutely brilliantly. So Reliance, I don't accuse Reliance of any drop here. No, I don't see any dip coming. But in case of if there is no red cut, then we can see a slight correction in Reliance, and maybe it will close around $63 at worst. I'm not expecting plunge in Reliance at this moment because Reliance has been performing extremely well with this a wide variety of services, and yeah, it has been performing extremely well. And in terms of the EPS also, Reliance is fairly good in that particular segment. Um, yeah. So that's all for the video. I wanted to discuss about my opinion about the different stocks in IT and banking services. So that's all for the video. Hope you're having a great time. And the disclaimer at the end, so none of the analysis, none of discussion that I do here on this video or on this channel are meant to take any actual trade. They're meant for educational purpose only. Thank you very much.